The stock market has had 3 months of extremely high volatility. Despite the fake VIX index, we can clearly see what it has done with the massive intraday swings happening so regularly. With the Fed admittedly having a short position on the VIX index, we won't see the actual volatility being reflected there. Now we can see the most aggressive buy program in history today, as a huge amount of money swarmed into equities, and yet the market still finished in the negative. We're in for a wild ride. You came here for the truth, so let me unveil that for you. Today we're going to look at a couple topics. Number one, I want to begin with what happened in the markets. Then we're going to look at the pension funds and what they are doing. And then I want to touch on the biggest buy program in history. So let's begin by taking a look at the markets themselves. You can see it was a wild day, very clear. In the afternoon, the stock market started to escalate very high, and then suddenly it dropped off the cliff. You'll look at the right-hand side, the Dow Jones down into the red somewhat. The Nasdaq is just barely up, and the S&P just barely down. So it had been a wild day overall, very clear. That was the theme over the last few days, and in fact, since October, nobody knows what to expect. Now I want to cover an issue that is finally being acknowledged in the mainstream media. This is the only one I've seen actually talking about it, but they suggest it's just a theory. In this Bloomberg article, they actually finally started to mention it. One theory for the giant stock rebound is a $60 billion pension frenzy. Actually, it's $64 billion. But anyway, let's move on to the data. Trying to figure out what caused the biggest single day stock turnaround since 2010, at least one analyst attributes it to buying by pension funds that dove into equities after December's carnage. The S&P 500 index posted the biggest upward reversal in 8 years during Thursday's session, rallying back from a 2.8% deficit. It didn't make sense what occurred. The market shot up so high in such a short period of time. It wasn't just people buying the dip. That's ridiculous. We already covered that in previous videos. I'm not going to get into it again. The about face could reflect end of quarter adjustments by pension funds that have $60 billion of shares to buy this month, among the most ever, according to Wells Fargo. There's more details in here and I'd like to cover it for you. Just basically wanted to reiterate the fact that here we are talking about it a few days ago. The media didn't touch it. They didn't want to go near it, and for obvious reasons. So we're looking at this information. $64 billion isn't, of course, bigger than the amount needed to actually move markets, but it's more than enough to trigger all of the algorithms to begin buying. And that, of course, is what they want to do. Now, the pension funds, I don't know what's going on behind the scenes, but I can tell you right now, there's been a lot of people that have been purposely following the trend in order to sell off, and I'll prove that to you in a moment. So let's continue with this first. Institutional investors with large holdings in stocks and bonds use the end of quarter period to balance out their holdings, adding to the losers and cutting on the winners. This time they went big on US large and small caps, adding $35 billion and $21 billion to indexes that are set to post the worst month since 2009. Money got pulled from the fixed income that's outperformed stocks. So they're doing a rebalancing act right now, and that's basically what they intend on doing for themselves, for their own pensions. I don't know what's really happening behind the scenes, but this is a fact. That's what they're doing. They've admitted to it, and now we have all of the data, more than enough, to prove that this is in fact happening now. And if it's not happening today, then it might happen tomorrow and the day after, and we have only a couple trading sessions left before the end of the year. While the $60 billion rebalance is historically large, its effect is probably exacerbated by the low market liquidity conditions. A given dollar to buy or sell is moving the market more than normally would. Obviously, people right now at the end of the year, number one, tends to be a slow time, but what's occurring is that people are scared. They don't know what the hell is going on, and they're waiting and seeing. So when you see this type of money move in, it's going to trigger those algorithms in what would normally be a rather calm time. time, but there's been the trade tensions, there's been the Federal Reserve, there have been so many different issues underlying all of this that have caused such volatility from October up until present day. Nothing guarantees the rally will be repeated, as such phenomena are quickly exploited by other traders. Now that the end of day rebalancing is well known, traders may buy ahead pension funds only to sell high during the end of day rally. Those waiting for the right moment to dump a lot of stock could do so in the last hour of the session. We definitely saw something crazy going on today where the market rockets higher. There was big sell-offs occurring, and that is in fact the truth of the matter. Now I want to look at something that isn't discussed in the mainstream media for the most part, and why I think it's pretty obvious. This is the NYSE Tick Index. For those who don't know, let me quickly just break it down. The NYSE Tick Index is a short-term barometer of internal market strength. We typically call these type of indexes market breadth indicators. The particular index is calculated by subtracting the number of stocks on the NYSE that are currently on down ticks from the number of stocks on the NYSE that are currently on upticks. So for example, if the number of stocks on upticks is 1,000, on the down ticks it's 500, the tick index will be plus 500. Okay, I hope that makes sense. Today, we experienced the highest ever. The biggest buy program in history happened today. And just previous to this, we saw the fourth highest ever. So the amount of money that's being put into the market now is historic. However, there are so many people selling out that look at what happened to the market today. It was actually into the negative. It was terrible by the end of the day. Why is that happening if record amount of money is flowing in? That is truly worrisome for everybody, but of course, don't worry, just buy the dip. That has been the foolish mantra for so many people who have unfortunately chased this the entire time. From October into November, there was this constant repeated mantra of don't worry, stock buybacks will come back in November and fix this problem. Then we got into the middle of November and people started to wet the bed. They started to realize that things are a little different now because the stock buybacks had come back, but the market didn't. Now we're at the end of December and the market is looking terrible. Yes, we've had a couple very good days, but we now have a full breakdown, an entire explanation as to why this occurred. It's not looking strong. In fact, it looks weak at this time, and people need to chase what's occurring and get ahead of the game. These are the signals that you need to be following. I'm bringing this information to you. I hope you do appreciate it. I think it's very clear what's happening right now. This type of information is not provided in the mainstream media, and hopefully other alternatives are available to you as well. I try to bring you all of the latest, most important content, but I know that certainly I'm going to miss so much of it because there's all of this information coming every single day. Now, if you want to track the tick index for yourself, there are many different websites you can go to. I'll show you one. You can look at tradingview.com and see the tick index here. There's an interactive chart that they have along with so many other charts. Tradingview.com is a great resource to have. And then I wanted to finish off with this. Sears wins reprieve from liquidation as the chairman Lampert makes last minute bid on bankrupt company. They apparently have made this deal. They got a bunch of these different financial institutions involved, and so they want to make sure that this company stays in business. Now I feel bad for the people who work there and of course the periphery around them, all these corporations that are going to be hurt when these anchor stores leave. I have a very big problem with this because a lot of individuals don't realize what this is. This is just delaying the inevitable. Sears is going to fail, and the companies that have been supporting this company are probably going to lose out big time as a result. I think this is a big mistake to save the company from a business perspective. I just feel bad for the individuals, that's all. So let's see what happens. They're saving the company now. Perhaps it looks like things can actually go well in the near term, maybe even the medium term. But what happens as we enter a new recession? What do you think is going to happen to a company like Sears? People are going to throw throw that stock into the garbage. And sadly, a lot of people are going to be hurt as a result. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. So all you got to do is click that one button and you're supporting me. That's it. If you want to comment on this channel and you don't know what to say, just say something relevant to the video, or just say something random. Who knows? Say Janet Yellen, say stock, say stock market. Any of these words helps to tell this search engine that this video is related to that. But the more engagement there are, the more thumbs up, the more thumbs down, the more comments, the better it is. So I do appreciate all of that help. And last but not least, if you want the financial education you were not taught in school, these two books have it all. You can actually flip through these books at Amazon. There's a link in the description of the video here, so just click that. It'll bring you over there. If you're more interested in the audiobook version, you can get that at themoneygps.com.